Okay, folks, welcome back. And we're going to be continuing our discussion on reinforcing order block theory. This teaching, we're going to talk about propulsion blocks. And a propulsion block is a candle or bar that is previously traded down into a down candle or bullish order block and takes over the role of price support for higher price movement. In this example here, okay, in this crude diagram, we have a down candle, which shows price willingness to move higher. And then we have a new down close candle that trades right back into it, seen here. That candle becomes a propulsion candle. What makes it propulsion is that it's already dropped back down into an order block that's already predisposed to go higher. Then we created another higher order block that touches the initial one. That new higher level bullish order block or down close candle will be highly sensitive. It should never see the mean threshold break half of the body's height or the middle of the range of that candle's body. That mean threshold should not give way. The sensitivity is going to be very much more amplified when it trades back down into the high, but we are willing to allow it to still trade down in the middle of the range or mean threshold, but it most likely it will never do that. It just trades down into the high of the candle and it immediately explodes. It may go pip or two below the high of that particular down candle, which we're naming as a propulsion block. The market will show a sudden and violent movement away from that down candle. That's a propulsion candle. Let's take a look at it in price action to get a better feel for what it looks like. Okay, folks, let's take a look at a bullish propulsion candle. Okay, you can see price has moved from a low here, and we're on the buy side of the curve, and the market has several down candles in here. So we would take this as one full bearish candle because it's consecutively 3 down candles. So the bullish order block is framed like this. So we have equilibrium down here. Price trades all the way down to this level here, but falls short of equilibrium. So we have a level at which price could reasonably trade down into, but it doesn't do it here. So price trades lower here and then rallies through its own 3 consecutive down candles. So this is an order block as well, together, all 3 candles. And then we have this candle right here. Okay, see this down candle? It's trading into these down candles together. So this is all one bullish order block because it's all down price movement, reaching for a level to buy, and then price moves through. This candle here trades through the highest of the down candles. So that confirms this is a bullish order block. The very next candle trades higher, and the next candle opens and trades down into this candle here. When this candle creates the down close and closes, this becomes a propulsion candle. What makes it a propulsion candle is that we are trading another down candle into a previous down candle when the underlying context is bullish. The powerful nature to a propulsion candle is you don't ever really see a mean threshold violation on it. So if you get an opportunity to see it trade back down into, as it does here, this candle opens, trades down into it right there. The open comes in at 133.45. The low on this candle comes in at 133.45. Goes right to that candle. So that's a bullish entry here with a propulsion candle. And again, all it is a down closed candle that trades down into a previous down closed candle, or in this case, this is a 15-minute time frame. I don't have a way of showing you a 45-minute chart here, but it's the same price action that we've seen here. The down candle trades into this order block that would be bullish, and then we see price trade higher and then come right back down into this candle here. This is the propulsion candle. That means we should see immediate responsiveness on bullish price movement higher off this down candle should it trade back down into it again. Here's the clue. If we break the mean threshold of that type of candle where it's already traded down into a previous order block, it's bullish. If this loses its mean threshold, chances are it's probably not a good trade. So that means you can have a really ultra tight stop loss on your long entry, or you can have immediate feedback that you're on the wrong side of the marketplace, and you probably are better off either going to the sidelines or many times looking for a reversal to go short. Okay, we're going to look at an example of a bearish propulsion candle. Okay, we're going to frame it around a higher bearish order block. It's this candle right here. Price trades up into it here, breaks down. So now we're going to add another level of order block theory. We have this last up candle that's the bearish order block here, referencing this one as well. So now watch what happens. We have price movement lower, then we trade right back to this order block right here. This candle becomes the propulsion candle right there, this one. So now we can cut that candle in half right here. Boom, hits it right there, main threshold, trades immediately lower. This is a sell entry on the propulsion candle that's bearish. We could be a seller there, and we can also use a entry at a later time where it trades right back into this candle's low, where it trades right here, hits it, responsiveness immediately moves lower. So look at the responsiveness after it trades into this candle. You have to see it break below this candle's low, which it does here. Okay, it's already showing a willingness to not want to go above that mean threshold here. But it breaks down, then trades right back up into this candle's low. It doesn't need to go up to the body. It's the low of the candle on the propulsion candle. It's going to be very, very sensitive. Hits it, immediate, quick responsiveness, as you would expect. That's why I gave you the name, the propulsion candle, because it propels price quickly and suddenly, and it gives you immediate feedback. Very little drawdown, immediate price responsiveness. That's exactly what we're looking for as short-term traders.